Hey guys, Mike here. So, oh boy, what an interesting day in the market. And it was like, did yesterday really happen? Like, it did, but I think we found the culprit, which I'll tell you about and stuff after some research on this. Because we heard all kinds of stuff in the comments. You guys were putting stuff in the comments. You were hearing about PCE data getting leaked. Some Fed president saying something that 10 other Fed presidents already said this month. All kinds of stuff, right? But remember with the news, they use the news to use that as an excuse of why the market got moved here or there, right? And so, keep that in mind. We're talking about people talking on TV and stuff, and we'll go into that, some other things. But I noticed, if you notice, one thing that's been happening, I think this is what's holding the S&P back from actually setting new 52-week highs, unlike the Dow and the Nasdaq 100, right? And we'll go into that, and because you can see, I think money's looking in other places, and this is why this is happening, going, I can get way more bang for my buck right over here, and I have to worry about all this overhead, okay? So we're going to go in to those stocks as well. But really what happened was, according to some data tracked by Bloomberg, you can see that puts on the S&P 500 with strike prices of 47.55 and 47.65 and expiring on December 21st had notional value of 15.4 billion and 11.7 billion, so a lot. By far the biggest value among put options as of the last close. Wednesday's total put volume on the S&P 500 was the third highest of 2023. And then there's a company called Spot Gamma. It's actually a site you can go look at and stuff. They had a lot of good data on this as well of what happened. And so I don't think that should be any surprise. We've talked about that before. Usually though, we're talking about it on the way up, right? And so you've seen that in Tesla. It really is the big one with those zero DT options, and it forces market makers to buy the stock. In this case, it was forcing market makers to sell the stock, right? To try to remain neutral and stuff. And then, of course, people started panicking out. It's like, oh my God, my gains are going away. And then retail starts selling, right? And then, so that's kind of, that doesn't surprise me. I mean, we haven't really seen it on the downside in a little bit here. Obviously, that was the third highest day of put volume in the whole year, and we're at the very end. And so I kind of let you know, we just keep seeing it on the call side, and we don't think much about it. But imagine, and people have talked about this, like one day you're going to see a massive crash, and it's going to be caused by these kind of instruments that we use every day, because zero DT is what? It's over 50% now of all options volume. So it can go both ways, and you got to kind of see that. But dip divers did step in, and we'll talk about that. Now, it's a good thing is, I would say it's a good thing, we're basically 70% services, and we don't make anything in this country anymore, because manufacturing data continues to be just absolutely god-awful. I mean, the Philadelphia Fed Manufacturing Index came out minus 10.5 versus minus 3 estimate. New orders sank to negative 25.6. Prices paid ticked up to plus 25.1. Employment fell into contraction. But the upside is the 6-month outlook is actually improved to 12.1, according to all this data. But the good thing, you look at the chart and just say, yep, that does not look good. But we're 70% services, so people just don't care about that right now. When it comes to employment, we did get that data out today, and you can see right there that the Fed is basically getting what they want, and the fact that continuous jobless claims continue to go up right there. Initial jobless claims, though, they want that to start ticking back up again. A lot of this is going to be seasonality, so we'll see in more January, February, really where we're at when it comes to initial claims. Now, I will say this, and one of our members pointed this out, and I brought this up right before we started rallying, and it really has to do with exposure, right? Are we getting overstretched? I mean, yeah, I said it 2 days ago, right before we had this little flash thing happen. And you can see this is active managers and how they're polled and stuff. Right now, their exposure is at 97. And when I did this last time for you guys in late October, before we started this rally, we were at 23. And you can see when you get to these kind of levels, and this goes back to 2019, we tend to get pullbacks. That does not mean this thing will not keep going, because as you can see, it can get over 100. I think 103 is probably the highest reading and everything. But when we draw a line and stuff across, you can see a lot of times it don't get much higher. And so if we continue into a Santa rally, continue into January and everything, as far as the exposure number increasing, it can still go up. But even going back 4 years, you don't see it go over usually 103. So we'll keep an eye on this. So it's like a contrarian indicator, right? That's what you want to look for. Now, the good news is smart money's still buying in, right? HYG, green today. You can see still going up. You go to a 4 hour. Yeah, do we still see some kind of bearish divergence. Yeah, we definitely still see some bearish divergence right here on the RSI. But again, that could take a lot of time to play out if it plays out at all. But right now, the thing to keep in mind is they're still buying into this rally. And so I'll keep you updated on that one. Now, looking at what really took place today. And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. And that was all the sectors just absolutely going off. And dip buyers came in like crazy, right? There was only one red sector, and you can't see at the very bottom, it's real estate. And it was barely red. Everything else just massively up today. And it was even crazier because it wasn't like some smooth day or anything, because we went up in the morning all right, but then we end up coming right back down and going, oh boy, look, we're going to turn red for the day, and then going right back up. So I have a complete V-shaped recovery, which was interesting to see, because the VIX was actually green, the SPY was green, everything was green. That's usually when you're like, okay, who's right, who's wrong here, right? But again, it's all about keeping things in context. And, that's why they put these lines on here to make you feel better. There's all-time highs, right? This week is still green, even after that drop yesterday. There's July highs. As long as we don't cross that, we're good, right? You can come down and bounce, do whatever it wants to do. We're good. It's those kind of levels you want to look for. If those kind of levels get broken, then yeah, we got some major, major issues. You go to the daily right here, and like we said, we look at the RSI down there. Did it need a breather? Yep, sure did need a breather. That's usually how it works. But we'll see if this thing's going to continue up. But there's the all-time highs, and it's only like 1.5% away right now. And again, we'll get into what I think is holding this up more than anything else right now. When I looked at it today, and if those start kicking in, then we're definitely going to go there. But you would think, if we do have any kind of Santa rally, and we do have positivity going to the 1st of January, we're going to hit it, right? The IWM, obviously still the best performer. Small caps getting rotated back into. But what I like to see is right here. What is this? It's consolidation. Very tight range of consolidation right there. That's what I like to see, because that builds out support, right? That's the 0.5 Fibonacci, which I'm actually going to readjust this a little bit here. But that's what I think when you will actually get to see a pullback, if not a decent pullback, because that'll be the 50 Fibonacci level, which is a major level, right? When it comes to fibs, and a lot of times you'll see a pullback at that level. But when you look at it, there's the all-time high, there's the bottom. That's why I'm drawing that from. And also when you look at this, it's good that we're breaking levels, which is great, right? We broke the July high, and we broke the October high and all this stuff. But look at that range, And so even when you go over the 50, that golden pocket is going to be right there. I believe that is like maybe March or February of 2022. That's going to be a major hurdle to get over if we continue to move up. But that's a ways away, so let's not even worry about that right now. But here's what I think is happening with the S&P. And this is what the other indexes really don't have to worry about. Look what's going on with their two biggest components here. You got Microsoft, right? It's sitting there wedging. So it's setting up for a move, but really you're just setting this very, very tight range going on right now for like 3 to 4 weeks right now. And so, you look at that and you're like, okay, I think it's going to break the upside. Yeah, now, of course, it breaks the downside. Obviously, you see that nice little volume gap right there. But remember, this accounts for like 6% of the S&P by itself. Okay, and then you'll have on the Apple, I believe that actually accounts for 7% on the S&P, if I'm not mistaken. So a total like 13%, unless they change the weightings without me knowing about it. And when you have that happening, it's going to drag on you. They just hadn't been moving. They'd be in the red or just trading sideways while the other stocks are going up. And you can see right here with Apple, same thing. Reached that all-time high. Again, this is what you like to see, or this is what you actually see when this happens. You'll see an all-time high and then go, oh, hold on. And then, boom, momentum kind of fades. And now it's just sitting there as resistance now, again, bumping up against it. And this is the most heavy-weighted stock in the S&P still. And just that momentum right now just isn't there for that stock. And what you see happening, obviously, when you have 13% of your total index is not moving, that can slow you down like crazy. But what's really happening here is you're seeing them move into Meta and other stocks. Look at Meta. It's just quietly sitting there about to reach all-time highs. It's not very far away at all. Look at that. And so it's moved up here to 354, 382. Again, not far away. We'll go ahead and set that right there. That's all-time highs right there. And you're crazy if you don't think we're going to be getting there. I would say by mid-January for sure. They've moved it this far up. 8% away, that's nothing for Meta. And then you look at Meta, on the daily here, and what are you seeing, right? Higher highs still, and higher lows, right? So that is a bullish thing, and I'm just going to be stunned. Do I expect some kind of basically to move up again and probably move back down to 354 anywhere near that range instead of another higher low for sure? But this is super bullish, right? What do you see with Google? Same thing. You get the breakout, that line right there, which was resistance, now should be support right there. But you're seeing more momentum going to Google as well. Why? Because it hadn't reached all-time high, right? It hadn't set a new all-time high in a little bit here, and you can see to the left, that's all-time high. It's not far away, right? It's just like same way as Meta. And so, it's a lot easier to get that up to all-time highs than it is to start keep piling into stocks that are already setting all-time highs. And so they can move this one up. Plus, you got the AI craze and all that good stuff. People are playing as well. And you're seeing the same thing with Amazon, right? I mean, Amazon's sitting here, does its breakout right there. I'm actually hoping it comes back down and tests this trend line to actually move up right here. But again, when we zoom out on this one, it's the exact same thing. Has not set all-time highs yet. Still got room to go. This one actually has a little bit more room to go than the rest of them. And you can see, we're at about 153 now, and then we can get to 159. But once you get to 159, that right there, that is going to be a beast to get through. That is a lot of resistance right there for Amazon. Now, Tesla, obviously, this is the 15-minute right here. You see people zoomed in with the quickness on this one. And this is why with Tesla, I'm telling you, just play around with one day, try drawing these levels, prior days high, prior days low, all that stuff. Get your fair value gaps in there, your RTH gaps, and you can see what happened with Tesla pretty easy, right? It ends up gapping up this morning, okay? Comes straight up, and that 4-hour fair value gap, this is a 15-minute chart, but you can get this on a higher time frame, sucks it right up in there, ends up selling down like it should, hits the Friday low after closing the RTH gap to the penny, and that's where you get your bounce to move up for the rest of the day. Closes the 4-hour value gap to the penny, so we can take like all these away now. But it loves to play off prior days lows, prior days highs, like major resistance and support levels, right? And so, and especially the RTH gaps and the fair value gaps. And so again, a lot of people are expecting this to go up. That's why they were selling cash secure puts in this thing, try to collect premium faster as it moves up. And so, it still has part of this fair value gap here to fill, which could suck it up. And then you'll have Tuesday's high right there, which is not going to be the prior day's high tomorrow to look at. And then below, you got the ascending trend line coming up, which will be support, as well as there's a 4-hour value gap there as well, which will most likely bounce off of. So unless something crazy happens, this one still is trading in this tight little range right here between 248 and 260 for now. Now, Palantir upsets me because I totally missed this stupid thing, but I told you guys in the video a few days ago, I said, watch for it to move up in this fair value gap here and then probably sell off, right? A lot of people look for a short right there if we get that nice bounce, which we did. And you can see, even if you do the fib, like, I'm going to pull this over so you can actually see it. It went right up to the golden pocket, right there, which you'll normally see, and then sold off. I, of course, did not have an alert set, so that is my fault. I thought I put one in there, but I did not. And so, when you look at the RSI, you look at what's going on with Palantir, this could absolutely drop down into the 15s if it don't start picking up some momentum, which you can see on the RSI right there. It's down below the 15 level. There's not a lot of people pushing into this. And the reason why it's taking a drop to 15 so it gets in that volume gap right there and breaks that trend line. That's where we're heading to for sure. And so it needs some buyers to step in. Now, Baba, this is an interesting one here because you're getting to move back up into what was a demand zone. Now it could be resistance. But I'm going to show you something else to watch out for, which could be a good thing for Baba. And of course, if we go back to the daily here and zoom out and stuff, you can see probably moving up to 80 should not be a problem as long as it can keep some momentum going behind it. As you can see, because it is in this volume gap right here. But the real thing to watch out for, I believe, when it comes to Baba is watching what's going on with K-Web. And if we go up here, we'll pull up K-Web for you, see what I'm talking about, and see if this is actually bottoming or not. And trust me, we talk about the real estate industry being a mess and everything else, which is true. But what are you seeing a lot of right here on K-Web, which is their Chinese internet ETF? A lot of consolidation right here, right? A lot of it. This thing, and if we zoom out even more, you can see it's been sitting in this area right here, trying to go into a stage 2 for quite a while. And that's why you see that's pretty dang good support built out. We're talking about months of being in that area, as you can see with the volume profile right there. But when you zoom back, this is what you saw before with K-Web. So you go from 2014 to 2017, and now you're going from 2022 heading into 2024. So I would watch that for sure, because obviously if that starts to break out, all those stocks are going to start to move with a quickness. Now, as far as economic data, we do have core PCE coming out pre-market at 8:30, and PCE index month over month, year over year, which that's really the only thing people can pay attention to. I mean, personal income and spending is going to be great and all. And then, of course, Michigan consumer sentiment. But PCE is really what people are going to care about, because that's what the Fed cares about. And it's all about these rate cuts that the market says they're pricing in for March and all that good stuff. And don't sweat that. Like, are they going to cut in March? Who knows? Maybe they will, maybe they won't. If they don't, obviously the market will price that in too by pushing it down. But right now it's pricing it in, wink, wink. And so we'll just keep riding the wave and everything and enjoy it while we can. Don't forget, I mean, tomorrow, obviously, the market, I believe the bond market closes early tomorrow, but the stock market will stay open in normal hours. I'll have a Friday video, Saturday video answering your questions, so feel free to put them in the comments and I'll try to answer them for you. I'm taking Sunday, Monday off for sure. Spend time with the family for the holidays. But I'll be back Tuesday of next week. Remember, short week next week, low participation, low volume. So just move with caution if you're going to be moving into a long position or something like that. So, or trading or anything. So anyway, hope you guys got some out of it, guys. Hit that like and subscribe button, and I'll see you guys tomorrow.